Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Kump, co-founder and CEO of Charityvest, to discuss how low-fee donor advisor funds and the charity environment during an economic turndown. Stephen, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me on, Jill. Pleasure to be here.
You got it. Tell me about a donor advised fund. Who typically uses them, and how can more people access the benefits of them?
Absolutely. A donor advised fund is a tax-deductible financial account for charitable giving, sort of like a 401k for charity. Money's tax advantaged when you put it into the account, and then whenever you're ready, you can send money out from the account to any charity, and you can invest the money in the meantime. So donor advised funds can be used by anyone, but they're typically used by people who want to be more purposeful about their charitable giving, either to leverage tax optimization strategies or bring general flexibility to their giving if they don't know what to give to, while still getting tax benefits in their current tax year. They're also used by people who just give to a lot of charities and want to streamline their giving all in one place. So with a donor advised fund, there's only one tax receipt at the end of the year, no matter how many charities you support.
What makes Charityvest different from other donor advised funds?
Fundamentally, what makes us different is we are built on fintech from the ground up. So fundamentally, we are easier to use, and super concretely, we're the lowest fee donor advised fund. This is all enabled by technology. The bigger picture here is we are on a mission to democratize and modernize donor advised funds to make them as ubiquitous as 401ks. Ultimately, we want to make giving more purposeful, more accessible, and delightful for everyone.
Stephen, you had mentioned before that you could do this all with one tax receipt, which resonated with me. It seems like it makes it more efficient when it comes to year-end tax planning.
Oh.
How else can donor advised funds help with that process?
Yeah, when it comes to year-end tax planning and thinking about how you can leverage a donor advised fund, there's really three principal ways on the tax side that donor advised funds can help. So number one is around giving appreciated stock or cryptocurrency to charity, or really any other appreciated asset. There's significant tax benefits to giving assets versus cash. So whenever you have an asset that's gone up in value, when you sell that asset, you're going to pay capital gains tax on that asset. But if you've held that asset for more than 1 year and you donate it to charity instead, you pay no capital gains tax whatsoever. You also get an income tax deduction for the full market value of that asset at the time of donation. So it's sort of like a tax strategy double whammy, and donor advised funds make it easy to give that asset and the proceeds from that asset out to any charity. So the second way is a tax strategy called bunching, which allows you to optimize your income tax deductions over a multi-year period. I won't go into detail here, and we don't have time, but folks can Google the tax strategy bunching and find out more. The third way is just general flexibility. People get to the end of the year and they want to give, or they want to give more, and they're not really sure which charities to support. And so a donor advised fund allows you to go ahead and set that money aside, get the tax benefits in this tax year, and then go on a journey to figure out what you're most passionate about supporting over time.
Have you seen less contributions due to inflation and the economic downturn?
Well, Jill, so far we've had a very strong year up to this point, but December is really key to the story. As you can imagine, a lot of people give in December. And so we'll know more as the giving season data rolls in. But one thing though about donor advised funds that we're already seeing, and there's really two giving metrics that we care about in the donor advised fund world. So one is contributions, money into the donor advised funds, and one is grants out. So how much are they supporting charities? And with grants, even in the most dire economic downturns, a lot of data and research been on this, we see donors step up and give more out of their donor advised funds because it's money they've already set aside. It's already sort of out of their personal finance picture already. And they're excited to step in that gap to fill strategic gaps that charities might have in their budgets. It feels more strategic to donors. We're already starting to see that, and grants are trending up toward the end. So either way, I think we're going toward a great giving story here at year end.
That's encouraging to hear. And Stephen, let me ask you, do donor advised funds help when it comes to transparency and charities? There's always a concern, am I giving to the right charity, or the funds being actually dispersed for the cause? Do DAFs help with that?
There's a couple layers there, but one of the things that donor advised funds do is by IRS policy, we can only give to charitable organizations in good standing with the IRS that are 501c3 qualified public charities. And so we are doing the due diligence to ensure that every organization that gets a check from us is in good standing with the IRS as a 501c3 or 501c3 equivalent. So when you get through a donor advised fund, you can take some comfort that there is an institution that is required by law to do some level of due diligence to make sure you're not giving to a fraudulent organization. And then also, we do encourage our donors to go on a journey to do more research to figure out what are the most effective charities for the cause that they're most passionate about. And we do provide some resources to help donors go on that journey.
And finally, what's next for Charityvest and donor advised funds in 2023?
We love this question. As a technology company, we're rolling out new capabilities all the time, but I'll give you a couple examples. So this fall, we just rolled out our beneficiaries feature, which enables our donors to plan their charitable legacy and what happens to their assets after they pass in seconds. So there's no legal forms required, no lawyers involved. It's really, really quick. So we're excited about that. And then two, looking to 2023. So we're about to tie into an electronic payment system that will enable the fastest and most comprehensive disbursements out to charities in the donor advised fund industry. And then third, we're excited to enable donors to collaborate together in what we're calling community funds. This will enable workplaces and folks at events to be able to pool money in collaborative funds for any charitable cause. And this is all part of our greater mission to make donor advised funds and purposeful giving in general more powerful and more accessible to everyone.
All right, Stephen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Pleasure to be here. Thanks, Jill.